let's say two buyers agents, they're not competing against each other, or let's use me as an example. Let's use two prop tech companies, we are actually not competing against each other anymore. We are actually competing against OpenAI. Increasing supply, increasing demand leads to price growth. That's it. Routine. I get up at 5:30 in the morning. I drive to my closest Macca's. I get, medium long black with 2 extra shots, and I drive back. I do that 3 times. On the 4th morning, Google Maps will tell me you have 3 minutes to your destination. So this is Google collecting my behavior and my patterns to predict what I'm going to do and to service me in that way. Yeah. Data is the same in property as well.
Do you call your chat GPT Mad GPT?
Yeah, he does. He does.
Hold on. Let me, this is not an ego trip. Let me just explain it.
Thank you for taking out time of your precious evenings. As always, it's me, Rahul from Finmatters, a mortgage broker, along with Ashish from Auswide Buyers Agency. And along with us today, we have a really special guest, Matija. Matt, is it? How do you pronounce the last name?
Djolic. It's like Djokovic, but it's shortened. If you play tennis, yeah.
That's the Aussie version of Djokovic. Just make it shorter, Djolic.
Yeah, that's it. Make it shorter, yeah.
Excellent.
Matt, where does the family name originates from? If there's a history around it.
Serbian. So Eastern Europe. I grew up, I was born there, I grew up there. I came here when I was 17, I think. 17, yeah.
Very interesting about your backstory that, when we heard that, you came here, you did not even speak English, and you migrated here 20 years ago. And if you can maybe speak to that, because later down the line, when people watch it, 15,000 people, they will be more relating with that aspect a lot, because a lot of them are also from different countries like ourselves.
Yeah. It's I migrated when I was 17. It's, I think, like before the age of 18, that region was going through a bit of a turmoil, and essentially before 18, I actually went through 2 wars, essentially, and then we migrated to Australia. I remember I was put back 2 years. So I used to go. I used to go with 1986 group in the same grade, and I was 1984, and they put me back because of my English. So I couldn't speak English. So I finished high school over there in Serbia. So I had to do year 11 and 12 again, essentially, because I just couldn't speak English at all. We did study in Serbia. You had language in school. Depends which school you went to. You either had French, Russian, or English. So I had French and English, but it's a completely different thing, learning I am, you are, he, she's, and all of that stuff than actually speaking. So, and the thing is, I'm the kind of guy that if I can't do something well, I actually don't want to even speak. So it took me really a long time. I was really, I would say, apprehensive and afraid and self-conscious about the whole experience. But yeah, migrated here when I was 17, finished high school. Then, went on, because my family is sort of, has an intellectual background. They all finished universities. My dad was really big on school, so I had to do TAFE because my HSC was atrocious. So I had to do first TAFE. I worked on construction sites for a very long time just to sort of, make a living essentially. And then, everything progressed there from, but, yeah, it was an interesting
hearing you now, listening to you now, nobody can tell that there was a stage even at any point in your life where you did not speak this language. You speak your first language.
Yeah, it's interesting. I'm very good at patterns and writing, and I'm on the spectrum. I don't know if you knew that. So and I'm very good at patterns and writing, and I had a great memory, not as good as I don't have as good of a memory now as I did before. So I could learn fast, but my father did a great chess move. So what he did is I migrated to Liverpool, which is southwest Sydney, I would say. And there's a huge Serbian community in Liverpool, And so what my dad did, he said, well, you're not going to go to school in Liverpool. We're going to move and you're going to go to school here. And there was no Serbs in that school at all. So he actually consciously put me in a school where I actually couldn't speak Serbian. I had to speak English. So I think that's what contributed, because I still have friends, let's say, that live in Liverpool and their English is not as good. So I was forced to actually immerse. So I mean, kudos to my dad, I say. And I guess that says something. You just have to dive in, you know. You have to dive in and expose yourself to the difference, you know.
So such strategic moves get to like, to make you have that higher than average growth.
Yeah, like exactly. But you know what it is like in life in general, what I think is you know, we as, you know, biological creatures, we're very, you know, apprehensive about this psychological burden of uncertainty, you know. Like for us, the unknown is, brings us fear, you know what I mean? But it's actually a great indication. As soon as you're afraid of something, you got to dive in. Like I give you an example, like I went to university and I was, and I still am actually, still am, and I can tell you a story about it. I'm very apprehensive about, public speaking. Like this is okay, but if I had to speak in front of like 100 people in an auditorium, man, that's like, heart attack territory for me, you know?
Yeah.
And I would on purpose push myself to actually expose myself to as many speeches as I could. I didn't go on Toastmasters or anything like that, but I had that mindset because I hated the fact that there's something in me that I can't control, you know? So I push myself to actually do things that are really uncomfortable, and I think that's necessary, to be honest.
Yeah. And you also
So,
mentioned that you were, sorry, yes, Ashish, go on.
oh, good. So I was just saying, Matija, while the basis we do understand you're inquisitive by nature. Now you've built hashtag, and I think just not everyone might be aware what hashtag is and what they do. And I've seen so many buyers agents and investors jumping on the platform and the sort of work that you've done on the platform. So, just would you like to give us a little bit of an idea on how
How,
it originated and what was running on your mind?
how did that come about? Yeah, so again, another very interesting story. You know, life is not linear. Um, like it doesn't mean that if you're doing something now, you'll continue doing that in future. And as I said, like I worked in construction on sites, then I started working for construction companies and then as an estimator, then I progressed in that business and I reached an estimating manager role, which was sort of an executive role. I was an investor at the same time, and I was doing my PhD at that time as well. And everyone's asking me, okay, why are you doing a PhD? Like, why do you need to do that? And my PhD was completely different to construction, completely different to anything else, you know. And then because I was an investor, I wanted to learn additional languages as well. I had this checklist, like what do I want to do? I want to learn a couple of languages. I want to learn how to play an instrument and all of these other things. So because of my background, I'm Serbian, and like I said, okay, I'm going to address the low-hanging fruit first. I'm going to try to learn a language that's close to how we speak as well. So I went to Sydney Uni to study Russian.
Oh.
And then there was my teacher there was a lady who said to me, like after a couple of lessons, oh, you got to meet my son, you have to meet my son, and all of these other things. And I'm like, okay, I'm not interested in actually going on mandates. But because she was really
Yeah.
nice and she was,
Yeah.
pushing. Okay, all right. And this is how I met Alex, and Alex is the co-founder of HTAG. And he's also a
Mm.
very inquisitive guy, and we were investors at that time. And I remember at that time, I used to look at the way I used to make my decision. I like to give an example. At that time, buyers agents used to hold seminars, and we all remember those times. And I would go. I'm the type of guy. If I'm investing, I try to find out and educate myself. I try to find out as much information as I can. Little did I know that those seminars are actually marketing funnels.
How to
I
how to pay off your mortgage in 7 years, and
yeah,
then they use it
I
also
mean,
as packages.
I didn't know the essence of the seminar is to get me as a customer, not to, well, to provide some
Very well.
education, but, and anyway, like I went to heaps of those and I was doing my own research at the time as well, where I want to buy. And I remember I did research and I looked at council websites and all of that, and I identified, Southwest Sydney as a growth corridor because it was actually branded like that, on the council websites. Population growth, infrastructure spending, and I used to live there by chance, so that was, and I used to ask these individuals, what do you think about Southwest Sydney? And they're like, nah, it's not on our radar. And I'm like, okay, obviously there's like, areas where people get information and not everyone is looking at the same thing, or it's not centralized. And I used to read Your Investment Property magazine. I remember at the back of Your Investment Property magazine, you had like published
Statistics,
metrics.
vacancy rates, and all. I used to read that too.
Yeah. Like you had the published metrics at the end, and it would say, for example, vacancy rate. And I educated myself, what is a vacancy rate? What is all of these things, And I saw like they publish it for that month only. And I'm like, okay, I know that vacancy rate for that month is X, 1.5%. But how do I know what's going to be next month? Like how do I
Spot on.
know what's like I need to understand what's going to happen in the future, because essentially property investment to me is a game of anticipation. Anticipating where things will move so you can buy in those areas. That's how I was framed, like that's how I used to think about it. So I said to Alex, how about we build something for ourselves that also includes trends analysis, all of these other things. I was lucky enough, offline guys, I said, it's ironic that, I'm a CEO of a software company, and maybe I said 5 years, but I would say 8 years ago, the only thing that I knew how to do was press the on button on my computer. And Alex was a software architect at Westpac. So he had that tech background. And essentially we started building for ourselves. We started building something that we are going to use to make better decisions when it comes to investing, and that's essentially how it started. We started adding complexities to it, metrics, reinventing sort of the wheel a little, adding new things, and this is how it grew. And then sort of buyer's agent started resonating with it more because I guess because of the inherent complexity of things. But that's essentially how it started. It started as a pet project for us. We wanted to do something for ourselves to actually make a better decision.
And it's a full
And
circle. Like, in 2025, you are like doing webinars and seminars, and see all the people who are attending now are going to be like, yeah, I attended this webinar and seminar in 2025 and heard this guy talk about that. And, in future, maybe they are also big portfolio owners or doing something of their own in property. Like, yeah, maybe they also shape up the future that way.
Yeah, absolutely. I mean, I think the main thing on how to get to these things is just wanting to learn, wanting to absorb information, to understand things. I'm a critical thinker by nature, so I'm not a contrarian in a sense that if you say something, I don't believe you until I see it for myself. I'm not that kind of a person. I'm like, okay, if you said something and I don't understand, I'll try to find out as much as I can about it. And when you do that, you're sort of stacking skills that's never going to go away. It's always going to be with you, and you're going to come to a point where it essentially becomes very easy, I would say.
and
That's why we
then
picked up this topic about limitations of data, and like, who better to talk us through that than Mr. Data himself. And good to have that. Sorry, Ashish, you were saying something.
no, I've started to just ask the questions around the
Yeah.
background and
Yeah, let's
vision of
start the
Matija.
questions. Yes. Perfect.
So,
Let's get into that.
Matija, as a tech founder and now an influencer as well, so how has your view already changed, and what do you see the future of data?
How much time do we have?
Well,
Okay, I'll tell you something that's been on my mind. Okay, so I've been scared and excited in the last 6 months. Okay, and I'll tell you why. Okay, now prior to that, how have things evolved? Now, luckily we live in Australia where recording mechanisms are robust. And there are records of sales and data, and you can purchase and you can acquire it. And what you saw in the last 2 decades is you saw a proliferation, or let's say the emergence of multiple prop tech platforms that centralize information for a user to have everything in one place to make the best decision. That was essentially the tech evolution. And we are now at this stage where the end user, of course, wants everything faster, better, more accurate, and that's how the product evolves. And it evolves not only from the user asking for that, it also evolves from the competition within the marketplace. It's essentially a natural byproduct of capitalism. But what has changed, I would say, what is changing, the AI is really changing things. And it's changing in a way where the reason why I have sleepless nights in the last 6 months is not because I'm concerned about my business. It's because I can't see what will happen. I can't actually anticipate, I can't actually connect the nodes anymore, you know. And that's I wouldn't say that's why I said concerned and excited. I do think that, the speed of retrieval of information, the accuracy has improved phenomenally, and how people analyze and access data has really changed. And I always say, I say to people, we are actually, let's say, two buyers agents. You know, they're not competing against each other. Or now let's use me as an example. Let's use two prop tech companies. We are actually not competing against each other anymore. We're actually competing against OpenAI. And
Unknown enemy, yeah.
yeah, that's the frightening bit, and how do you now I can talk, that's why I said I can talk hours that, the
Go for
AI
it. Yeah.
is
I mean,
the AI is not
last time our session.
is not vertically integrated, so it doesn't give you the information accuracy that you need, although it's perceived as if it does. But that's the danger that we are in, This is where the market is shifting and changing,
So spot on, because I know people these days search in ChatGPT and come up with options and start asking, what are your thoughts around these options? And I'm not saying it's right or wrong, but it's just overwhelming. Everyone has an opinion, and we were having a chat about this before. And we're not sure whose opinion to trust and what are their sources of information. And that leads to a lot of confusion. And you are spot on. I'd be lying if I haven't given a thought as to what the future would look like. And I think what we go by is a personal touch and that customization of service. And sometimes it is as simple as saying someone holding your hand and telling you this is what you should be doing because of these reasons. And um, yeah, just I don't know how that will happen,
Yeah,
but
yeah. I'll tell you a few things about that. So, first, I think the end user, we should, as end users, educate ourselves to understand how these things work, you know, and to understand how AI works is that AI has access to the information on the web, you know, and I can now come out and to promote my business, write an article that Morwell is the best suburb to invest into because I actually bought there before. So I want to pump my bags. So I want everyone else to go to that area. So there is an incentive behind the article that I write, which is unethical and also not correct. And it also serves me and my goals only, not everyone's goals at large. And what AI does, he pulls that information, he presents it in front of you as a valid source of truth. So people need to understand how AI works. And this is the problem. This is why the accuracy lacks. Yes, you can obtain information, but the accuracy lacks because the AI doesn't have access to paywall information. And information that exists behind a paywall is the core logic information, the HTAG information, the price finder information, all of these things that, the knowledge base and let's say HTAG has 6 decades worth of data in the background, So this is the problem. This is why you can't get an accurate answer. Now, what humans resonate with is, again, the alleviating the burden of uncertainty. And this is why sometimes we are blinded by the fact, okay, if something puts out an answer, I'm like, oh, okay, I got an answer, and you sort of don't even want to go deeper to ask yourself whether that answer is incorrect, because again, you're putting yourself in a position of uncertainty, okay? But if you want to invest in property and you're putting your financial future on the line, you must do that. Otherwise, you're going to destroy yourself. Now, coming back to the personal touch, being a buyer's agent is being a psychologist. It is as much being I'm not going to say psychiatrist because the listeners are going to assume that we're all insane as buyers. It is actually being a psychologist, and I deal with this every day. Like, you have this paralysis analysis and uncertainty where you need to structurally explain things to your customer in a way, first, that they can understand it, and second, that it matches with what they're trying to do, because every individual has different needs, goals, desires. So the variables are infinite. Yeah. So a human needs to download this complexity into a digestible format to the individual to actually explain it. And what you frame as hand holding, and it's not a negative term. Again, this is another layer that's extremely important. What people don't realize is, like, you need an expert there to actually explain to you what is important for you in this instance, and also to remove these psychological roadblocks that you have when it comes to making the next decision. I mean, you're putting 700K on the line, and you do all of the checks. I'm fronted with this every day. You do a complex analysis, you do all of the checks and balances, and then you see one negative spec, you know, that's potentially unimportant, you know, and potentially has no relevance to what you're trying to achieve. You need to be able to explain that to your client and say, you don't worry about this, and this is why you shouldn't worry about this, and these are the strategies that we have about managing your concerns, you know.
Spot on. And this is where I think when we start to interpret data, or rather, I should say, misinterpret, I always talk about data and I say everyone has their own perception towards how they see and foresee the data. So, from your point of view, and I know you've dealt with investors and you've dealt with very sophisticated buyers agents, but how would you say the data is interpreted differently by beginners, investors, and professionals?
That's a great question. That's a great question. Now, let's frame it first. So, first, property investing is a deterministic game. Okay. And what it means to be a deterministic game, and I'll give you a simple example. Reducing supply, increasing demand leads to price growth. That's it. That's it. So there's only misinterpretation in that if you don't have an awareness of economics 101. Yeah. So property investing is a deterministic game, meaning we are after capital growth or cash flow or mixtures of both. And there are certain economic forces or levers that will lead us to that result. Yeah. Now, where things get a bit complex. Things get complex when you throw the individual into the mix. And when you throw the individual brief, needs and wants and desires. What this inadvertently implies is that there is a hierarchical arrangement in a data set. Some property indicators are more significant for a particular brief. Some property indicators are less significant for a particular brief. For example, and we're speaking residential now, and we've spoken offline about commercial, which is a different kettle of fish. But when we speak in residential, if you're, interested in cash flow, then metrics that should be extremely important are rent, yield, vacancy rates, its trends, rental projections, etc., because there are cash flow producing metrics. Now, the problem arises is that when you treat all of the metrics under the sun in the same way for every individual. And this is where the complexity of interpretation plays a role. You need to understand which metrics have a significance for particular individuals, i.e. which levers will get you the result. And this is where we come to misinterpretation. So speaking about investors, and this is why we have a mastermind community that educates that and provides education for that process, which is essential. And Ashish, you know what I realized? I'll tell you, and Rahul as well. You have a lot of PropTech platforms out there. Most of these platforms have similar data. Now, there is a difference on how you derive a metric that can vary, and that also needs to be known. But putting that aside, most of these platforms have a vacancy rate. You know what I mean? And I've realized because you're throwing individual into the mix and because you're investing for that particular individual, which informs a hierarchy and a varying significance of metrics, I use this, term, I say it's one thing to see figures on a page and yet another thing to understand the story that they tell for that particular individual. And this is why I realized you need to coach individuals on how to lay information. Now, investors, you have sophisticated investors and investors that are starting off. Investors that are starting off that don't understand, what stock on market percentage actually is. And I always say you need to start understanding the definitions of metrics and what they represent. Now, I always say that data is representation of behavior. A lot of people have this assumption that data is this entity that exists somewhere here and individuals are operating here. No. Data is a reflection of what individuals do. And I always use this example. I say, okay, I get up and this is my routine. I get up at 5:30 in the morning. I drive to my closest Macca's. I get, medium long black with 2 extra shots and I drive back, I do that 3 times. On the 4th morning, Google Maps will tell me you have 3 minutes to your destination. So this is Google collecting my behavior and my patterns to predict what I'm going to do and to service me in that way. Yeah. Data is the same in property as well, So for the individual investors, first it's understanding the definition of the metric and understanding what behavior that represents, And then as you increase as you increase your understanding, you have to start realizing and connecting the dots into a narrative. Example, what does it mean to see a reducing vacancy rate? Well, when vacancy rates are reducing, that means that there's a higher demand for rental properties, and if there's a higher demand for rental properties, that will increase the cost of the rent. The rents will go up, and if rents go up and property prices stagnate, you'll see an increase in yield. So see how I connected a few things into a narrative to understand what is happening. Now, an advanced user can connect 150 nodes into a narrative. When I say nodes, I'm speaking in terms of, distributed systems or, crypto essentially, but I'm meaning property investing indicators. An advanced user can connect everything into a narrative and know, what am I willing to compromise on regarding my strategy? What strategies do I have to manage these compromises, and what I don't want to compromise on, or can't compromise on in response to what I'm trying to achieve. So I think if I had to narrow it down to the most simplest way to see if a user is advanced or non-advanced, I would usually, the question that I get is, what do you, Matt, think about this area? As soon as I get asked that question, I see they're approaching it in the wrong way because they're going from it backwards. They're looking at the area. I always answer for who, i.e. what brief, what time frame, what risk, it depends on the person that's trying to invest. Gladstone might be a great investment location if I have brief X. But if I have brief Y, Gladstone might be a choice, for the lack of a better word,
Spot
So,
on. And that's the thing. I think that customization is missing. But even otherwise, since you've touched Gladstone, I was looking at an area and
it was an example.
Yeah, I know. But the report said, vacancy rates are 4%, and the client looked at that and said, you know what, the vacancy rates are 4%. We don't want to target this. And I said, don't worry about that. We look at entry level properties, we push the price down, the yields come up, and we were targeting 4.6, 4.7% in the area. So yes, that's perception of.
Okay. So this is great that you said that. Before I actually jumped on the webinar, I answered the same question. So I did a strategy session with an individual. We analyzed 150 indicators. We narrowed it down to a couple of suburbs. And again, this is the analysis element, They come back and they say, okay, but the vacancy rates are too high. I go, hold on. First, your strategy is not cash flow. Vacancy rate is a cash flow producing metric. Now, is vacancy rate something that you should try to manage? Absolutely. Okay. So first see whether the area satisfies everything else that you need, i.e. you're focusing on capital growth. Does it satisfy that? It does. Tick. Okay. We have a compromise that we need to make. It's the vacancy rate. How do we address it? You always need to have pros and cons, and you need to manage the cons through strategies. How do I address vacancy rates? Well, first, the most simplest way is to allow for more than 2 weeks in my cash flow projections. Yeah. More than 2 weeks of vacancies. So I'll allow for that, When I say that, I mean, usually when you're using cash flow projections, like how much you have to pay out of pocket for the listeners, people usually allow for 2 weeks of vacancies, yeah? To cover the shortfall. Allow for 4 or allow for 3, whatever, and you will have an idea of whether you can manage that, okay? After that, Look at the demographic profile of the area. Okay. And if you analyze the demographic profile of the area, make sure you buy an asset that's more rentable, which suits that population. So you are developing strategies on how to manage downsides. And there's no perfect area. It doesn't exist. It does not exist. This is something. So this is like a meta mind frame that everyone has to that everyone has to integrate. Perfect area doesn't exist. Okay.
Spot on. And I think this is a good point because as I like to call, there's something called a spillover. So if one area, let's say for example, $700,000 and fairly low vacancy rates, fairly low supply, and the area next door has a little bit of supply and a bit higher vacancy rates, but the yields are working. And this is where I'd like to call a spillover. When people are priced out of a certain area, they'll only consider that area when they are literally priced out. And I generally would suggest that, why can't we go a little bit ahead pretty much early on? So we safeguard on $50,000, $60,000 just by being 5 minutes ahead. And I've seen such areas working pretty much in the last 10 years. or on and on. So, and this is what sometimes on the ground, something different is happening than what the stats are suggesting at times. So coming back to those questions, so I've seen
Even in those,
areas.
sorry, just even in those, like when what influences like the choices of individuals are the biases, because they listen to social media, they look at the videos, podcast, they listen to 10 different things, and they come back to like when they do the property selection, those elements may not be that impactful for their what they want to achieve. As you mentioned, every client's brief is different, and that should just be customized as per that. But then when they're listening to that, they try to impose that on, let's say, the buyer's agent, that what about this thing? Yeah, but this thing does not apply to your requirement. Like, what about that? So these also play into this
Yeah, yeah. I
their
mean, I
choices.
mean, I mean, absolutely. And what Ashish has observed is, okay. So the way I see things, I look at it as if I'm a scientist. Okay, and scientist has hypothesis, and then they need to prove that hypothesis is either true or false. Yeah. So if I'm speaking about a spillover, I need to coherently explain how we'll get there, because you're gonna be in a position where you have a centralized suburb and there are many other suburbs around. So you have to explain why this one and not that one for the spillover. Yeah.
Yeah.
Why this one and not that one. Okay. And you mentioned something that's very interesting. You mentioned yield. Um, Again, but you did say something that's reflected on the ground and not in the data. I disagree with that, and I'll tell you why. Yield is a data point, and what you're using yield as an indicator. So you're using higher yields as a more of appealing instrument to investors and a flow-on effect, so they can enter at lower points. When they're already priced out of another market. So you already you're creating a narrative from the data points, which is true. It does happen. Usually areas that start growing, they start growing. And by the way, how does this happen? Well, rents go to a level where it becomes more sensible to own a house. Yeah. So you shift to ownership. And that especially compounds if you're priced out of a market that's next door. Now, we do need to account for supply and demand dynamics, because having yields alone that are high means nothing if there's abundance of supply, which again, the question of timeframes comes into play. What I would usually say is that, yes, yields are high. It provides a great spillover opportunity, okay? But what is the time frame of that spillover eventuating? And then I need to revert back to the supply and demand balance and see how that is working. So bottom line is, absolutely, this is what I said initially. It's all about anticipation. If you're buying in areas where everyone is buying, it's like I usually say this, when it's a hotspot, it is already too late. Now, by the way, you might have strategies or briefs where your client needs to generate 20% in the next 2 years because they have the serviceability, they need to leverage into additional purchases fast, they want to build their portfolio fast. Well, that means that they need to invest in a hotspot, yeah? So you have those instances, but in most instances, it's a game of anticipation. It's a game of moving the chess pieces to see where they're going to go. But what I'm saying is that if I'm going to anticipate, I need to prove the hypothesis. When I say prove, nothing is provable 100%. There's no certainty in life. No, I can come out after this webinar and I'm going to use a dark example, but I can be hit by a car. I don't know. You know what I mean? So nothing is certain, but you need, and this is why I use the term probability, and this is what in statistical analysis also happens. You need to prove, oxymoron again, to a high level of probability that something will happen, and you need to have that roadmap that it will happen. Why this suburb and not next one? And I always do that, And again, this is the human in the loop thing, Ashish. This is the human in the loop where the human or the buyer's agent sits there, interprets the complexity of information and says, I think this will have a spillover effect, and you list 10 reasons as to why. If you release 10 reasons as to why, mate, you're like ahead of 99% of the pack, okay? Because getting to 2 reasons is difficult, let alone 10. And if you list 10 and let's say you're wrong, trust me, you've done everything that you needed to do, and I would call it a black swan event, essentially something that was really outside of your domain of control happened, which in most instances in property investing does not occur. Why? Because property is an illiquid asset. And what I mean by a liquid asset, you don't see sporadic changes in market movements. That's why they go through cycles that are either 2 to 10 years or 3 to 10 years, like it's a slow burn. Like I invest in many asset classes and I trade stocks on a 15-minute chart. You can't trade, property on a 15-minute chart. That's why I mean, like, usually when you really pinpoint the market movements, rarely do you see something shifting dramatically, which is also coming back to Raul's point. What is actually comical is the fear mongering that happens on social media. And I'll give you an example. When Perth was the flavor of the month, and that was, I would say a year ago and then 4 years back, or maybe a year and a half ago and then 4 years back. You mention any other area, you essentially cause a witch hunt on social media. Everyone's attacking you, wishing you all the worst and all of these other things, And I remember people used to say, nah, Melbourne has nothing. It's a nanny state. Everyone is moving to Brisbane. Everyone wants to live next to the ocean. There were even media articles printed about that, about the migration, And here we are. Where are we now? Melbourne.
Melbourne, Victoria, Shepparton,
Everyone is
regional
buying.
Victoria.
Everyone is buying there, So yeah, it's just back to Rahul's point, like it's comical how social media, and this is what people need to know. You sell your business by promoting, by making me believe or making me afraid about something so you can induce FOMO so I can act.
Yeah.
People need to know how the world functions. You know what I mean?
Just on that, like I remember that just on this, like within the span of 3 weeks, there is a whole rumors and air about don't buy in Victoria. There is land tax. This is happening. Victoria is the worst place. So in 2 weeks, 3 weeks, everyone buy in Bendigo, Shepparton. What just happened?
Exactly.
How did that shift happen?
And this comes to ethics as well. What I don't like about the industry that we are in is that the same person, same individual that's saying bad things about the area, 2 weeks later, they're promoting the same area that was saying bad things about,
Spot on. And look, this is where sometimes I feel, Matt, that common sense doesn't kick in when you're so driven by data. Nothing wrong with data, but I've been tracking, let's say Melbourne, for example, or what I've done is I've done the median price history for last about 35 years across major 5 states. And now coming to cycles, which is a vague concept, but the point of cycle is how the state goes up and down and how much time it generally takes. So talking about Perth, Adelaide, we're talking 15 to 18 years sort of time frame, or 14 to 18-year time frame between when it goes up. Perth goes up twice, and it has happened twice in last 35 years, and then drops or stagnates for a longer period of time. When we're talking Sydney and Melbourne, we're talking for the same time frame going up and down. And there are events, yes, but in the hindsight, we can always relate to an event. However, we're talking 10 to 12 years. Now, if I would have tracked Melbourne, which I do, from 2014-15, about 2021 too, and it's not that Melbourne dropped in value. 2021, 2022, Macedon and Mitchellshire was still growing. And it's easy to interpret those markets when you know how the markets are working. And I've made 30% in that 2-3 years when most people say it hasn't grown, it has lost money.
There's markets within markets, of course. Yeah.
Spot on.
Yeah.
And then around 2025, or rather October 2024, and I was telling my clients, the properties went from $100 to about $200 and came back to $170. That's effective 65-70% return in most cases. Generally, Melbourne stay, and there were predictions of Melbourne being the most populated state, which I know the predictions at the peak also generally are exaggerated a little bit. But it did take rocket science to understand. Melbourne has dropped by 15-20%. It's not a crash, it's a decent drop. And the properties were very well priced because there was an extra 5 or 10% negotiation that was happening as well. And the properties that we bought in October just last year, those properties have changed 10-15% already.
Yeah.
So, and there are some of the clients in attendees as well, and they've made $50,000-$60,000. Just what we bought in last 3 to 5 months.
Absolutely. And Ashish, just I think, see, this is, and I've spoken about this at Reba event in Melbourne as well, a couple of, weeks ago and a month ago. We have to have, you said common sense. You used the word common sense. We have to have an understanding of what data actually is, you know. Now, what you said in your story is you tracked patterns of growth, okay, to delineate market cycle positioning. You've used data and inserted an interpretive layer on top, which is your knowledge, to produce insight. Yeah. Now, it is the same when you're reading a book. Every word, you connect the words in a sentence and then you understand the sentence, you know? So it's the same thing about data. You need, and I always say data is a representation of behavior. You need to understand what it represents, and then you need to be able to read it, and then you need to be able to connect it, you know? And use common sense, but I would actually say it's much more than common sense. It's first an intimate understanding of economics and finance. Okay. Now, we don't have to be economists and business analysts to understand that it's easily obtainable if you're willing, you know. But there needs to be that interpretive layer of, and this is what another coming back to, sort of morphing into the AI and things, people have the tendency, they believe they press a button and gives them a result, You can't do that because you need to connect disparate points of information into a sensible narrative to understand. And then to block out, there needs to be a thesis, okay? There needs to be a thesis, which is, essentially the economic theory, supply and demand and all of that. And then you block out the noise. The biggest hedge fund managers, okay? The biggest hedge fund managers, they have, the reason why they were extremely successful at times where everyone was losing money is because they followed their thesis, and hedge fund managers, they manage billions and billions of dollars worth of assets, yeah? So the reason why they were able, and there's a few only, the reason why they were able to manage a lot, make a lot of time at difficult times is because they follow the thesis and they blocked out noise. You usually develop a thesis so your bias doesn't come into your decision making. Your fear of, shit, what if this goes wrong and then I can't pay off a mortgage and then my wife is going to leave me. This is how we usually interpret scenarios. We have an emotional attachment, So there needs to be a level of awareness and understanding that you demonstrated and you explained where you connect the dots and you say, okay, this makes sense. And I don't care what other people are saying. I know that this will work because of this is how it functions, So and coming back to your previous question, I guess that layer of interpretation is what can be missing, and what can be missing and what can lead to a wrong decision. But when it comes to data, as I said, I think the term data is misunderstood, and if I could relate it to anything, it's like a book. It's like a book and words and letters. It's like it's symbols. They're symbols, and you're putting it's. How about this? It's a puzzle. Okay. So the best thing is a puzzle. So you're putting the puzzle piece. You can't force one puzzle into another, and even if you do, you're gonna get an incoherent picture. Okay. But you need to know there are rules to it, What are the edges? You start with the edges, then you build in and all of these things and they fit in. And if you have the ability to do that, that's your thesis, then you can block out the noise. And you said you can make money in markets where they're branded everywhere else like they're, losing money essentially. And you can pinpoint those. But this is a human in the loop element,
Spot
Data
on.
is jigsaw. That's beautiful. Yeah, that's
Yes,
perfectly well
that's
put.
actually very well quoted. I agree. Now, look, and then some people would say, including me, actually, that, and this 18.6 year cycle, and I've gone through a part of a book which mentions it. But then there's another, I've mentioned the other cycles as well. And yes, you've said it's pattern recognition is how Tony Robbins also quotes it. But generally, I've seen over and over, and coming about Melbourne, I would say I've worked literally one full decade. And sometimes it doesn't take science or rocket science to realize these areas have performed well in the past, and there's no reason why they won't perform. And yes, the analytical mind says there's still less supply. And back in 2017-18, these areas were listed as the top 5 areas or 10 areas where the migrants were moving. And if everything continues, it would perform again. But would you say when people say history repeats itself, is generally, would you say that's true?
I wouldn't say it repeats itself, but I would say it rhymes. I would say, and see, this is an interesting thing that you just brought up. A lot of people, and this is the cop out argument. I call it the cop out argument. Where you can't predict the future from the past. And then I go to common sense and I go, okay, then if you can't predict the future from the past, tell me, what are you going to use to predict the future? The future? You can't use the future to predict the future. So what I'm trying to say is that the only domain that's accessible to you for you to analyze and interpret is the past. Okay? Now, is it perfectly going to happen again? No, there will be variations, which is why I said it rhymes, but there are patterns to things, and patterns are linked to broader economic forces, whether it's interest rates, whether it's demographic movements that you pointed out, whether it's many of these things, which again reduce down to supply and demand. Yeah. But the thing, and I'm glad that you actually said something that's very interesting. I have, we have a DEX module which, compares, many suburbs across many metrics. Yeah.
Yes, this
And,
decadiles. I
and
actually, sorry, coming back, cutting you there. I couldn't understand what DEX was. And then I realized and as I researched what is DEX and how does those decadiles work. And that's when I got to know why it's generally split into or done into splits of 10. Well, or back to
yeah,
you.
yeah. So that module alone, I'm not going to go into it, but there's a lot of science behind it, like there is, and this is the assigning of weighting and significance and nuances in response to the brief to know what matters and what doesn't. It's actually very complex, but also simple. And anyway, so usually I'll give you an example. There is a hierarchy in metrics. Some are more important than others, and usually across every brief. Some are more important than others, not across every brief. And I'm not going to go into details, but let's say growth in the last 10 years. And I have a lot of, and there are theories out there, and I'll give you one theory. There's a theory out there that says that if something has grown 50% in the last 5 years, you shouldn't consider that suburb. It's as simple as that. That's the theory. Yeah. And then what that actually says to me is that the individual or the person that believes that theory is true assumes that growth comes from growth, or growth or lack of growth emerges from previous growth. Like it implies the connection. First, growth comes from reducing supply and increasing demand, which means that you can have an area that has grown 50% in 5 years and still has supply scarcity and increasing demand, which means it will grow further. Example, Townsville. Townsville has grown 90% in the last 8 years. It means it's been a hotspot for the last 8 years, which means that 4 years ago, it would have grown 50 in 5 before that, and I wouldn't have considered it, and I probably would have left 200 grand off the table. Yeah. So you said if something has grown a lot in the last 10 years, well, do you know how I actually use that? Now, first and foremost, to me, that's a level 3 metric. It's not as significant as supply and demand, but I actually use that as a stability indicator. I say if something has grown a lot or 100% in the last decade, that means that there's a reason behind it. Yep. And what is the reason behind it? Economic underpinning, demographic shift, incomes, all of these other things that are stimulating this growth. So that means, there's something there that's constantly propping up this area, now that to me is a good sign. I don't consider 100% growth in the last decade as a bad thing. I consider that as a stability factor of the area, i.e. lack of volatility, meaning exaggerated compounding, meaning more money in my pocket. Yeah. Now, the next thing that I do is I need to assess steam. Does that market still have steam? And what are the steam factors? But a lot of people would say, just because something has grown a lot in the last decade, I don't want to invest in it. No, wrong, completely wrong. And coming back to the beginning, you only have the historic, by the way, people need to understand that governments, banks, these biggest institutions out there who have extreme risk profiles, what do you think they do? What do we think they use to make decisions? they use all of the data that they have at hand, even data that happened in the last minute, but also in the last 5 minutes. But also, I'll give you an example. Banks in UK use traffic light data for their loan approvals as a factor. Okay. And I can recommend the book. It was a book about big data. They actually use traffic flows to determine whether the suburb is growing and whether they should actually lend within that suburb. I mean, imagine it's something, a proxy that's not completely related to property, but it's something that was happening historically. And when you think about it, it actually makes sense. It actually makes sense because it's like the walk score, but it's a drive score.
Yeah.
It actually, when you really think about it. So bottom line is history rhymes, and you don't have any other domain upon which you can make a decision but history.
Spot
Now
on.
the more close and more data you have historical, the better your decision will be. But I mean, I had people who say, "Oh, game theory." They throw game theory at me first. I don't think they even know what game theory is, but
Oh,
they
I
just
play
throw it
poker.
out there.
I play poker. I know game theory, optimal, what they do, all the same modules. But yeah, go on.
No, but they say, well,
Yeah.
sometimes game theory would interrupt the historical cycle, or things like that. It's just trying to. Anyway, again, social media.
So,
Yeah.
Matija, you've picked a point where we've mentioned confirmation bias in one of our discussions, and now you brought in Townsville. From Townsville, now we open can of worms talking about the metro markets and regional markets.
Yeah. Great
Now,
question.
I've got a confirmation bias, like I'll openly admit it. I feel, and this is again pattern recognitions, they are short outbursts in regionals and they're long stagnancies going, judging by the history of growth. And Townsville was a very good market. Um, when I got one of my own mates in Townsville and I said, look, it's your, I think XYZ property. I said, now is when we can take a little bit of risk. We go in, but we chase yields. If you get the growth, awesome. You bought for 433. It's a dual occupancy, rented for 650 at that point. Today it rents for 750. It's been 3 years, priced at about 680. So yes, he got everything that he needed. But the question here is, um, would you say metro markets versus regional markets, they move differently and there is a little bit of difference between patterns of growth and stagnancy?
Another phenomenal question. Now, again, how much time do we have? So, answer is okay. So, the usual adage is that GCC or Greater Capital City regions perform the best. The answer is wrong. No. Now, the answer is partially wrong in a sense that, yes, it's the case for Perth, and yes, it's the case for actually, it's not even for Melbourne because Mildura has grown the most in the last year. So again, it disproves the point. But on an aggregated scale, you would say that Melbourne GCC is growing more and Perth GCC was growing more than its regionals. Yeah. Now, there is a reason behind that. And the reason behind that was high levels of affordability combined with high levels of socioeconomics. But then you have Queensland. Queensland regional markets were outperforming Brisbane. Yeah. Now, will that
Yes.
continue? Will that continue? We don't know. But I'm saying regionality versus GCC is not a uniform or ubiquitous yes or no. It depends which state and it depends at what time frame. Now, the second part to your question is what is the length of the cycle? Okay. Now, yes, you're right that regional cycles, because of the lack of diversification of economies, they tend to have shorter cycles. Okay. But they tend to be more robust. Now, Townsville disproves that rule because Townsville is a regional market and yet its cycle, when it comes, and what I consider as a hotspot, I would say, I consider a hotspot anything that has grown 10% above annually. Yeah. And because that usually translates to 20 offers on the same house, and you will know this better than me. Am I about right?
Yeah.
Yeah.
15 to 20 was very
Correct.
common.
That's it. So that's a hotspot, So Townsville has been generating, as I said, above 10% annually for the last 7 or 8 years. and it's a regional market, which means that its cycle was elongated. Yeah. Now, what was the reason behind that? What's the chronology behind that? Again, it is very high levels of affordability that started and supply scarcity, and in some instances like Burdell, very high levels of socioeconomics, or Bold Plains, Bold Plains generated 40%, and this is what people don't understand. They were chasing Perth while Bold Plains in Townsville generated 40% in a year. I mean, who generates that to me, it's baffling actually, So to answer your question, first, it depends on the state whether regional markets perform better than GCC. I also don't think that that's fixed. I also think it flips. I think in some instances, and this is the spillover effect that you were talking about. Let's say Perth GCC was performing great for 4 years, and then the prices increases so substantially that you get a cap or you get a friction point. And then you see the regional performing at another cycle better than GCC. What I'm trying to say is I believe it's cyclical. I don't believe it's fixed. I also believe that it's state dependent. I do, however, would say that regional markets, because of economic diversification, tend to have bigger bursts and shorter cycles. However, the disproof of that is Townsville. So it's like I'm giving you an answer, but I'm not actually giving you an answer. The thing is though, understanding is, okay, you always come back to why, and coming to bias and confirmation bias. And I'll give you a story about it, like, because we're in, a data company or a data analytics company. And just to give you a bit of context, there are multiple revenue streams for HTAG. Subscription revenue stream is a small stream. Like, we have banks as our clients. We have enterprise offerings, okay? So we have banking institutions and clients, and quite large banking institutions, So the rigor is there in assessment, But what I'm trying to get to is you have to go back and understand why something has actually happened to eliminate the bias, And when I speak to my customers, as you know, the interface, let's say, you put in some metrics and it will give you a short list. And what people usually do, and even when I do strategy sessions one-on-one, they go, okay, can I see the short list? I go, no, you're not going to look at the suburbs. I'm not allowing you to look at suburb names. Why? Because they'll see a name and then the implicit or confirmation bias is going to take over. What you need to know is, first, you need to match the indicators that meet your brief. And I always say, don't even look at the name of the suburbs. And I'll give you an example where a person that actually teaches that, made a mistake. So in the last year and a half, and people who are in our community actually know this for a fact, because I've been doing posts and all of these other things and doing shortlists and stuff. Darwin was coming up in the last year and a half. And I say Darwin, I say only 2 areas in Darwin. When people say Darwin, they think, no, most of it is bad. There was just 2 areas that were coming up in the last year and a half as good, midterm investment opportunities. When I say midterm, 1 to 5 years, yeah. I was ignoring it because I'm like, Darwin, who's going to buy in Darwin? Do you know what I mean? Like, I had this confirmation bias that I was downgrading it in my list, We now see, certain people making 150K within a year by purchasing in certain areas, Now, again, when I talk about this, and for the listeners, I'm not saying Darwin is a great area. Darwin is a great area for certain briefs, for certain timeframes, all of these other things. But as I was researching, I was having an implicit bias. And given the fact that property investing is a deterministic game, I shouldn't care where things are located as long as they have all of the ingredients that I need to realize my goals. And I made, a certain mistake in things. So bottom line is, to alleviate the implicit, the confirmation bias, which we all have because we're human beings. It's tied to our identity, our knowledge, and everything that we know and have experience. It's normal. It's not like, shit, I got a defect, I got to get rid of it. It's normal, The thing is, though, trying to understand the root cause of things and why has growth happened in this area, What are the indicators that have led there? And then trying to replicate that. But what is interesting is, yes, different areas have grown in different locations, but most of them, if not all, have the same ingredients. So it is the ingredients that matter. It is actually not the location, which is why, because the ingredients were present in, let's say in remote or rural, whatever you call it. Not that's not the term. Like in Queensland, regional
Original, yeah.
Queensland, because the ingredients were present there. That's why the growth happened. Because the ingredients were present in GCC Perth. That's why the growth happened. But people
So,
tend to
yeah.
approach the analysis from a different way and say, "Nah, GCC is always, or Greater Capital City is always where I should go."
So look, there were some courses which were I was really interested in seeing why do only, and this was until about 3 4 years back, right? All the indicators only reveal the hot areas at that point. So now figuring out the markets, and you mentioned Townsville as well, and I think there's a big role of the infrastructure projects that were going in the area. But coming to hashtag and your understanding around distinguishing between a sustainable regional growth versus a short-term ripple just because a major CBD market has gone up or metro market has gone up, and that's why it's just catching up. Um, how would you distinguish in these short-term booms versus your sustainable long-term growth areas?
Again, I mean, yeah, phenomenal questions, Ashish. So it's okay. So HTAG has 150 metrics on the platform. Okay. Now, I always say the fact that we have 150 metrics doesn't mean that we have a better service. It actually, in some instances, it could complicate things. But the reason why you have 150 is that you need to create a robust narrative that spans different sections of time. So first and foremost, when it comes to timing entries, and anticipation is the opposite side of the coin to what you said. The indicators are showing a hotspot. Anticipation is what will be a hotspot in X amount of years. This requires interpretation of trends. Okay. This requires a robust trends analysis of supply and demand metrics and all other factors. So you can time your entry and project when it's going to move because of the liquidity of assets. So when you have an established trend for something, trend is your friend, I always say, when you have an established trend for something, you can, from the severity of downtrend or the uptrend in that trend or the slope, you can interpret how enduring that will be in the future. Therefore, you can peek into the future what will happen. However, there is an issue with that because there are certain, let's say, supply and demand indicators. I think we're the only company that has 5 years worth of trends for supply and demand. And we also separate them into short and long-term trends as well. So you can time the entry, yeah? Now, once you pass the 5 year mark, the question becomes, okay, what do I do now? How do I know that, yes, I'll get the growth in the first 5 years, but I would like to extract equity again. I would like this area to go through another cycle of growth. This is the long-term aspect of it, if that's your brief. And this is where you need to, this is where correlation analysis is very important, and this is where you need to develop or understand or have indicators that highlight the correlation to long-term stability, okay, and endurance. So to give an example, so I'm not too abstract, first and foremost, you need to look at the historical growth rate cycles of the area to see whether, there were substantial drawdowns in the past, and to analyze why. Another great long-term indicator is, industry diversification. And when you really think about it, even if it's a regional town, if the industry is robust and diversified, it will go through cycles where it picks up again. Most importantly, however, it is the levels of affordability. Okay, because of the gap in wage growth and property price growth, it's been the widest since 1970. Affordability is the main driver of purchasing patterns. And correct me if I'm wrong. I would assume that 95% of briefs that you get a shisha for 650K and below.
I'm fortunate on that front. I get a decent 600 to 800-ish sort of
Okay,
purchases,
okay,
about 60%.
okay. 9 out of 10 for me is 650 and below. Yeah.
Yeah.
As a
And,
broker,
and
even I get most of the deals are about 650-ish mark in today's market or under that.
Yeah, and I mean that's an indicator of. I mean, we all know that it's difficult to get onto the property ladder, and there is an affordability issue. Yeah, so to determine market steam, you have to start from very high levels of affordability. Okay, and also market steam is implied by affluence. It's implied by very elevated socioeconomics. So and there are many more indicators, but I'm just giving you four. I'm giving you market cycle fluctuations and seeing if there's big drawdowns. I'm saying higher levels of industry diversification. I'm saying higher levels of socioeconomics and affluence, and starting from a very high affordability base. That propels me past the 5-year mark. Again, there's no certainty, but it tells me that there's steam left in that market. So yes, you're completely right. And this is, again, another very important topic. Not only do metrics have a hierarchy, but they have an associated time frame. There are long-term metrics, there are mid-term metrics, there are short-term metrics. And imagine now, coming back to the puzzle analogy, not only do you have to understand the implicit hierarchy for what you're trying to achieve to fit the puzzle, but you also need to understand the associated time frame with each and one of these metrics to be able to layer the cake. It's like I always relate it back to a discussion of making a dish or cooking a steak. You cook a steak, but you need to put some seasoning on top for it to taste nice. You know what I mean? But if you have seasoning alone, you have no steak. So bottom line is, it's this layering of time frames, of metrics and their time frames, that increase the probability of that steam happening, and most importantly, it is a comparison, because and I always say this, a vacancy rate of 2%, when somebody comes to me, and this is another indication of a novice, somebody comes to me and says, Matt, what do you think about the vacancy rate of being 2%? I go, nothing. I think nothing about that. I go, what do you mean? And I usually am very abrupt, but I try to be comical so I don't offend people, So I go, I mean nothing. I go, what do you mean by that? Well, that number alone is meaningless if I can't compare it to anything. So that means that if I have suburb A, which has 1.5%, and then suburb B that has 2%, then I can tell you what I mean about 2%, So coming back to your question, it's about layering metrics that have different time frame associations. But most importantly, it's about comparison to increase the probability. So if I have 10 suburbs and I layer this cake and address all of the time frames, and one is sticking out as more probable as having steam, that's where I'm going. You know what I mean? You can't decide from an isolated instance. You can't discern. And I go philosophical when I explain this to people. I always say, well, the only thing that you can say that something is right is because there's an equally wrong thing that exists out there, because right in and of itself would have no meaning without the wrong. So therefore, you're right in a sense that, and this comes back to brief. And I always ask my clients 5 questions. And one of them is, what is your asset hold time frame? Are you planning to hold the asset 10 years? Yes, I am. When do you want to extract equity into the subsequent purchase? I.e., what is your affordability like? He or she would say, listen, I can buy, within 2 years. Well, that means that we have to buy in a hotspot, which will generate 20 to 30% in the next 2 years, allow you to extract equity. But we also have to tick all of the long-term boxes to make sure that you have the ability to do that again. And we have to find the fastest horse by way of comparison.
Yeah.
Matt, you mentioned affluence levels and affordability, which also brings me to the owner occupiers. Like, can they also use HTAG and get the insights from that to buy their homes? Or is it strictly for investors?
Yeah, that's an interesting thing. Now, it comes to the ideal customer profile, and we've spoken offline regarding who you guys are servicing as a business, for example, and sometimes you stumble into or create a product that can service owner occupiers, commercial, and you're good at all of the things, With us, we first try to nail the problem for investors and buyers agents, and that's how the platform has been built. Now, when it comes to owner occupiers are not driven by deterministic decision making, i.e., by growth. They're driven by emotional elements, i.e., I need 25 meters from this cafe, hypothetically, or do you know what I mean? So this is what it comes.
Their kids are going to the school, they want to live in that. Their dog wants a backyard. Yeah,
absolutely. We have those metrics, by the way, and actually, school ranking is also a great indicator for growth, depending on the price point. And the price point is usually $850 above, where mostly owner occupiers participate. Which is, again, see how each metric actually has more relevance depending on the price point. And we have those metrics. but it's not built in a way for an owner occupier to use unless they're proficient enough, because they're not looking for growth. They're looking for certain emotional aspects and elements that can't be that are meaningless to investors.
Comfort and convenience becomes of prime importance.
Correct.
I have a
Now,
question about, let's say, like someone is buying properties under, because I'm a broker, so I have to work about SMSF, trust, different structures. In those, like when they're buying under those structures, they want to look at the holding cost because those properties have to be neutrally geared. If they're buying under a trust, for them to be able to go to a different one because their accountant has to write a letter. So can that be integrated into that, or can we just look at the rental yield? Or like for SMSF, people want something which is a newer build closer to CBDs rather than buying something with old and claim depreciation, or rather than concentrating on those aspects. So can HTAG bifurcate these things and help us come to the conclusion?
yeah. So there are a couple of things you mentioned here. So the first one is the portfolio aspect. So you need to be able to manage and plan your portfolio, to do different scenarios under different structures, to be able to understand what your shortfall will be, to understand what the structure provides, that trusts losses are quarantined and then they're credited after. All of these other things, can you cover the shortfall? This is all of these things that you as a professional would provide for them. Now, can HTAG? Yes, we have a portfolio modeling tool that's been added recently that's very robust, that you would model a portfolio first, which will then inform research. Now coming back to the owner occupier thing, and we did realize that, we're expanding our services. Initially it was built for investors and buyers agents, but coming back to the dark horse of AI, which we started with, we actually spent the last year of building our own agents, so not like using ChatGPT and slapping a name on it, which most people do. We actually our CTO joined our company who is proficient in that, distributed systems, and we built our own agents. Now, what is beautiful about that is that now the owner occupiers can use it and say, okay, give me a suburb, and I give you an example. I give you a client example. Now, this is going to be a little bit comical. You guys won't believe, but I can even share screenshots of emails to your audience. So I had a client come to me who was an owner occupier, and she said, and at the time the AI was finished, we haven't released it and we still haven't released it to our cohort. It's gonna, I think, be released tomorrow actually. So, and I could actually use it in the back end, and she said, can you tell me which area to buy in that has the most pole dance studios in it? Because I'm a pole dancer, and I want the proximity to pole dance studios. And this is where AI becomes very powerful, is because you can actually communicate with an interface to delineate listings that are in proximity to what you need, but also layer on top the historical data and performance if you need it. So this is the interesting element. Now, so bottom line is portfolio management, and not speaking about HTAG. Yes, it's necessary to have that and to have a plan, then to and that needs to inform your research. As you said, let's say, you have an individual who can't cover the losses in a trust. Yes, they're going to be credited thereafter, but they can't initially cover the losses. We bought recently under a trust, but we can cover the losses and it's fine, and it's a way of cloaking an asset we can infinitely buy. It's for our strategy. Now, that means that when you plan out your portfolio, as part of your filtering mechanisms, yield plays an important role, which means when it comes to selecting the area, you need to be very particular and adamant about gross yield. By doing the calculations, you'll need to know that it needs to be sitting at 6%. That will be your criteria for choosing the area, Now, as a professional, you need to explain to the individual, well, and Ashish has observed that, very high yields, there are two types of areas with very high yields. You have areas that continually have very high yields, and you have areas where very high yields translate into substantial growth thereafter. So there's also different types, and it needs to be explained to a customer that just because it has a very high yield, we still have to address, Newman in WA has a very high yield, but it has a minus 40% negative growth in a decade, so it's a concern. So bottom line is, there are a multitude of models on HTAG which address all of these things, and there is an element now where owner occupiers can actually search. The thing is that's different to, let's say, ChatGPT. An owner occupier can search on ChatGPT and find that information. With our agents, it's like it has 5 decades of data plus all the geospatial elements as well, that integrated into a communication interface where you can actually speak to it, and I can give that client an answer. Well, these are the listings and this is the proximity, i.e. 700 meters, 1.5 kilometers, all of these other things, here you go. You know what I mean?
Do you call your chat GPT Mad GPT?
Yeah, he does. He does.
Hold on. Let me, this is not an ego trip. Let me just explain
Okay.
it. So
Okay.
we initially had 3 agents.
Okay.
So we initially had 3 agents, and those were Chat GPT. Oh, actually, I tell a lot. No, it was 3. And those were Chat GPT wrappers. So essentially, Chat GPT trained on our data. And we had Anna, that was a support bot, if you will. Then we had Eve. Eve had all of our metrics. Eve had all of our metrics. And then we had Matt. The reason why I called it Matt is because what is interesting about, sorry, my chair's dropping. So what is interesting about
You and your chair can't handle that ego. Like, that's too much for me.
no, listen, and by the way, it wasn't my call. It wasn't my call. So, and I'll tell you the story.
Absolutely.
I'll tell you the story. So, I hate that, by the way. So, I'm writing the knowledge base.
Yeah.
So, I'm writing essentially. Matt GPT was a theoretical bot in a sense.
Yeah.
I'm looking for capital growth. What should I be looking at?
Yeah.
So it's not metrics or statistics related. It does explain metrics, but it doesn't tell you this suburb has this. That was Eve, So I needed to write a robust knowledge base because we created a community where we do coaching, So we fed that to the AI. Now the new AI it's not Mad AI. It's not Mad AI. It's just HTAG AI. I think it actually has my face. It has my face. When you click on it, it expands in an iframe. I can't share the screen. I would show you. But we call
you
it.
can. You can if you want to.
Yeah. Okay. So let me see. Let me share it. And I don't
Let me
think.
just preface that we were just joking, and of course people know that. But
No,
yeah, you are
man.
one of the most humble,
You know what?
one of the most humble people that we know for sure. So there is no aspect of that.
I completely understand, and I hate the fact that. Hold on. Can you see my screen?
Yeah,
Yes, we can.
Okay, so this is the AI. I was just using it. Yeah.
Oh, yeah.
I was just using it. I was using it to answer some questions for clients, and so it's going to be a module. You can add your clients, you can chat to it, interface. I mean, there's a lot of things here, but essentially, it's a module where, like, you see how it's beta testing, so that's why it's not available to everyone. But it has my face on it because people in the community are used to me providing them the responses. Because I manage the community, and it's essentially everything that I've ever written plus our data. When you click on it, it's HTAG AI. Now, this is now, you can also use it as APIs and all of the other things, but it's we had a testing cohort. We've gone through it. It took us a year, so it's much more than the Chat GPT thing. But you can now talk to it and say, give me the listing for this in proximity to this. I want Shed Cafe next to me or whatever it is, but it has all of the 5 decades worth of data, which is why I said, this is a very powerful thing because then it can really give you the accurate analysis. The Chat GPT thing, it just doesn't really work. But for buyers agents, let me just give you this explanation. A lot of people assume that, AI or technology is going to replace buyers agents or whatever that thing is. And I mean, you guys have been in the industry a long time, understand what it means to manage a client and how to lead the client along the path. Now when it comes to tools, what people don't realize, and when it comes to AI, the less knowledge you have, the worse the output. So the fact that I can ask it questions. And people assume, I can now ask her questions. I don't need, a real estate agent anymore or whatever. You wouldn't know even how to begin how to ask appropriate question. However, if you have immense knowledge and you have inbuilt statistical regression analysis mechanisms where you can go and talk to it and say, give me this for this and compare it to this and do this. And then you can export it and send the explanation to client, which was driven by what Ashish has called common sense, what I call a lot of knowledge and experience, you know, imagine that power where you have that much information and knowledge and you know how to ask a question and then imagine the output, you know. So a lot of people think that AI is going to even the playing game. Like it's even the playing field. I say no, it's going to widen it because those who actually have knowledge will be propelled much faster because it's going to improve their workflows exponentially. Those who don't have knowledge will just going to stay behind because they're not going to extract. Imagine me going to ChatGPT and trying to ask it about nuclear physics or quantum mechanics. Okay. And then imagine a quantum mechanics professor asking it about quantum mechanics.
Yeah.
I can guarantee you that the results are going to be different, you know. But
It's the same with communication as well. I think when we're giving inputs to ChatGPT, rather than saying prepare a response, um, sometimes it's good to give it a framework that I'd like to use a care framework or a disk style response. This is what I perceive from what's written, and this is what's in my mind, and ask the right questions if you have to formulate a response. So I think yes, you are spot on. The way we give the inputs and how we perceive things
yeah,
is
so
very different.
Ashish, absolutely. Ashish, imagine this. Imagine you ask it a question and it puts out a paragraph. And you scan the paragraph and you have knowledge and you know that one word in that paragraph either shouldn't be there or hasn't explained the scenario or you want to probe it further. Just one word that's a little bit loose, that doesn't really, that can deceive or that can be misinterpreted, let's say. And then you
So
go further, and you say, okay, I understand what you said, but what do you mean by this in response to this? Like
yeah,
you would
well,
need,
actually, you know what? Sorry, we're going to more AI discussion. But I'll come back. I want
no,
to
no,
ask a
sorry. Yeah,
question for the audience, which you don't like to listen to. Tell me, where can our audience target the right markets at this point?
yeah, there's no, honest, I hate that question. I hate that question.
Yeah,
I
I
mean,
he
know.
doesn't like
like,
locations. When I saw this last question, I'm like, let's not even ask that because
yeah, no. I hate that question, but Ashish is laughing because I hate it, but I love to answer it. So
yeah,
I hate the question because it would imply that every area is good for, like one area
Yeah,
is good for everyone, you know, and that would be, that's such a dangerous misconception that people need to understand. The beautiful thing about property investing is there's an area for all of us out there, you know. Like there is a specific area that meets our brief for all of us out there, and you need a way how to get there. So depends on many things. Depends on your, as we said, investment timeframes. Depends on your growth targets at 2 years, at 5 years, at 7 years, at 10 years. Depends on your risk profiles. Depends on whether you're in the acquisition or the expansion phase of the portfolio or in the consolidation phase of the portfolio. And
yes, spot on.
to take, let's say, what we've spoken offline is if you're in the consolidation phase of your portfolio, maybe commercial real estate is for you. Maybe you shouldn't even buy residential. You know what I mean?
Spot
And
on.
what is consolidation? Consolidation is, okay, I'm consolidating, I'm trying to increase my cash flow, and I'm looking at cash flow components, you know? So it depends on what you are trying to achieve and what your goals are. Now, that can be a very complex endeavor, you know, because you're trying to deconstruct something that exists in the future 15 years. You're trying to deconstruct it to the purchase tomorrow, you know. But the questions that I usually ask clients and what we ask on the platform is, what is your budget? What is your investment time horizon? That's separated into three different domains: 3, 6, or 10, or something like that, or 10 plus years, because the time frame also dictates the metrics again, you know, or indicators. When is your equity extraction time frame? I.e., how is your serviceability like? What are the growth targets that you're looking at? And when can you buy again? You know, if you can buy again in 2 years, that means we need to achieve 30% in 2 years. But if you're holding the asset 10 years, that means we also need to satisfy the long-term aspects of it, you know. Then what is your risk profile? You know, like, i.e., first, what is your definition of risk? You know, like, you know, how do you define risk to you? To me, risk is an impediment to my outcome. And what is my outcome? My outcome is capital growth or cash flow. So what is your risk profile under acquisition expansion phase? And if you answer those 5 questions, and by the way, those 5 questions seem simple, but underneath there is like there is a narrative underneath that supports it that needs to be understood, you know, which can be learned, by the way, or can be downloaded to you by a professional. So that is what is dependent on, you know, like that's how you choose the area. A simple answer to the question can be buying Melbourne, you're going to suffer with yields. Buying Cairns, you'll have short bursts and maybe more volatility, but you'll get the growth. Buying Perth, GCC, you're going to be on the downtrend of the cycle. By like, you know, like there's so many things that require for that. You can't give a definitive answer. And the reason initially when I started, when I was asked that question, and I say I hate the answer, people used to assume that I hate the answer because I don't know how to answer it. But there is this. I don't know if you guys know who Richard Feynman is.
Oh yeah, the chemical. Sorry.
Yeah. So there is.
Yeah.
If you guys and the listeners in your spare time, type in YouTube Richard Feynman magnetism or magnets. Type magnets. And I know I'm conscious of time, but an individual asked Richard Feynman, why do magnets repel? You know. Why do they repel? And you'll see what he answers, you know. So essentially what I'm trying to say is the reason why I hate that question, I wasn't avoiding it initially. People assume it's because I don't know how to answer it. It's because the answer has so many variables that I'll actually confuse you more than make you more comfortable.
And you're very spot on, because when someone asks where should I invest, and we start to ask these questions, we are basically intruding their personal space because they just wanted a simple answer. And that was the reason of asking the question as well. So very well answered. We have a question as well, and I've got a question as well on another market. But Rahul, do you have any other questions before we start the question?
No, I just like, just listening from the experts, and I'm just here to listen today. That's my role. And but yeah, I don't have any questions. We can get into that.
So first of all, Matija, let me express my heartfelt thank you. I think the knowledge and the platform you've built is commendable.
Thank you.
I used to think, how can I get data on a spreadsheet? So that was answered around 3, 4 years back. But then since then, I've seen the data, parameters, knowledge, enhancements, everything grow. And with AI, I'm very sure it will be enhanced further. And you started very well saying Australian property market is not an intuition market, because at offshore countries, you ask your uncles, aunts, friends, because they are the only source of truth. They have the experience and exposure. So you talk to as many people as you can and recognize the patterns or simply follow them. Australian markets are not that simple. And every year I've seen you have to be equally scared. What happens if the markets you are investing in, they don't grow in value? And I believe you can only take the measures based on what the data is reflecting, as you've said, and you just start to work through that. But then it's very easy to sometimes infer the patterns in between the cycles as well, be it growth cycles or bust cycles. But no, thank you so much. And equally, thanks to Rahul as well. I think there's a lot of things going in the background to manage all of that. And hopefully, we are also trying, we do the lives more than anything else. But I'll come to questions. Rahul, is there anything you'd like to add?
I would like to ask, I'd like to, get to that, but the closing notes would be different. But I have a question. What's more with HTAG? Like, what's coming more? Because you mentioned AI, you also see some Zapier and other models you are doing. So the community would love to know what's more at HTAG, what more can they get?
Yeah. So there is a lot more. So the roadmap is huge. I would say that our intent is to provide a completely horizontally integrated experience for professionals, where you start with portfolio, and with asset selection, but in a very, very, I would say, analytical way. So there's a couple of things here, as I said, because the company is a little bit multidimensional in a sense that, we service professional investors, but we have also institutional and enterprise clients. So let's just finish the enterprise discussion. we're building development portals where people can actually build on top of our data and use our APIs and, build their own apps, systems, and all of these other things, which is also coming live very soon. So that's a big advancement. Essentially, it's going to really empower people who have great ideas to build their own things. So that's one thing. I would say for the professionals, we are also working at the back end journey. I know that there is an issue with sourcing, with finding the right listings, and I'm not going to talk off market, pre-market, all of these other things, because I think, we need another podcast or a session to dive into the pros and cons of that terminology as well.
Yeah.
Let's schedule that
Um,
in a few months as well.
yeah, yeah. And no, it's absolutely, and I think it's an important topic to discuss. But we really want to we are growing the ecosystem and bringing people on the journey who are very competent at building that back end when it comes to the communication with sales agents, but communication with sales agents when it comes to matching with particular briefs. So not just, spray and all of these other things, but like really sophisticated ways of having access to property that's not only advertised, having access to the agents and the ranking of agents and quality of agents and understanding whether they advertise always under market value to pump the price up or do this or do that, or all of these other things, that problems that professionals run into. So we are working rigorously on that back end of things, which should be solved very soon as well. So the intent is literally to provide a horizontally integrated experience where you don't need anything else. When I say anything else, I'm even saying, the capabilities of, the core logic, like,
Mm.
the
Yeah.
CMA, price finders, all of these other things centralized in a horizontally integrated experience that has steps, that has sensible steps that you need to go through, that has an educational element to it, that allows you to retrieve information very fast, to match with listings or get access to listings, to rate, to provide notes, to invite clients into, imagine eliminating the WhatsApps, that kind of communication, eliminating all of
Amazing.
these things and inviting
Adding social
clients.
media, adding social media to HTAG,
So
social media
I wouldn't
components.
say I wouldn't say social. Interesting observation. Yeah, there would be an element. I would say an element of social media where you're inviting clients into an ecosystem where they participate and you lead them on the processes of the journey, whether it's contract signing ticked, whether it's this, whether it's that, and it's all centralized. You have document control. You don't have to have multiple apps and stuff that, just things everywhere and yeah, so just, horizontally integrated centralized experience ecosystem. We invite people where every client has its own place. You have a network there. You also have opportunities to re-engage clients, to maintain, to use a mortgage broker term, to maintain your loan book, and all of these other things. So yeah, I mean, the plans are very big, and in all honesty, we've been actually quiet on social media in the last, I would say, 6 months to a year, because the team has grown. There's 6 people now, and we're making some great partnerships as well. Zapier is one of them. But what we want to do is, this is just one thing. Like, let's say partnerships with Zapier, you have access to a portfolio modeling tool, but how do you then bridge and allow for pre-population and automation of statistics across in order to automate the portfolio modeling and stuff like that? So it's really exciting. It's really exciting, but there are two aspects to it. As I said, there's, building an enterprise and developing, and APIs will be available for people who have great ideas that want to build apps. But then there's also just providing an experience to professionals where they can really execute for their clients and have a centralized platform where everything lives.
Amazing.
That was long. Apologies.
No, no,
No,
no, please,
don't.
like this is what we
But
are here
the
for.
sort of
And
effort
again,
you're
sorry,
putting in. Yeah, sorry, Rahul.
yeah. No, I'm just saying that, we love the passion that you have for your company and the community that you're building. We are also trying to do the community build up that we do here. 15,000 people are part of this, and they would absolutely love what you have presented here when we share with them. This has provided immense value to them, more than you would be aware of, because a lot of these individuals or whatever they are doing today are, a lot of them are IT professionals, and the natural progression of IT professionals today is the next in career line is being a buyer's agent. So so that's a career progression. IT professional becomes a buyer's agent, then they become a spiritual talker.
Yeah,
So
yeah,
this is gonna help a lot. Jokes aside, this is gonna help a lot of them to get into properties for themselves, and also maybe them to become a professional.
No,
Amazing.
yeah. I mean, I guys, again, and Ashish, I know you have a question. By the way, Ashish, I want to come back
Yeah.
to you. Thank you for the kind words, okay? And to both of you guys, really thanks for inviting me. I was when I saw your invite, I was actually really excited because I spoke to Ashish a long time ago, and I do follow your journey. I see how things are progressing, and the fact that you guys have grown and are doing the right thing. And as I said, when I got the invite and you asked me, I was really excited about it. So I really appreciate the invite.
Thank you so much, Matija. Now we've got a question from Nivesh, and I'd like to quickly cover that as well. The questions again, Matija, it's now you're going to say again how much time do we have, but we don't, because it's 10 past 8 already. So,
Yeah, yeah.
but the question again, talking about AI, and the question is for you, Matija. Can AI models incorporate fundamentals fundamental property metrics like median prices, supply, sales volume, rental rates, migration trends, alongside in microeconomic indicators such as interest rates, inflation, employment to forecast property market movements in Australia? I think it's already happening, but it's over to you.
Yeah.
Sorry,
So the
just one
question,
second. Sorry, just Matt. The second question is also very related to that, so maybe you can answer both together. The second question is, how do you make sure the data from HTAG analysis does not end up in ChatGPT LLMs? So if it's the same
yeah,
ChatGPT
that
AI,
both are great questions. Now. So first, okay, so large language models are not suited for deterministic decision making. Okay. So just because it's AI, it's not suited for regression analysis. Machine learning models in some instances are much better. Okay, so forecasting in some instances, a regression analysis is much better suited than an LLM. However, you can build into the LLM's knowledge base and you can train the agents on certain rules, like a regression analysis, and then it becomes powerful. Now, the models, the first question is most of the models have access to partial information where they can provide you with some forecasts, let's say. Now, the problem with models at the moment, as I said, is that they don't have access to paywalled information. They have access to the internet only. And what is actually very dangerous about models is how convincing they sound, like the large language models that are present today. So they will actually, what's called hallucination in AI, they would actually hallucinate growth rates. They would actually tell you this is the forecast, and it's an actual hallucination because they couldn't reach a conclusion, so they invented an answer on the basis of what they had, and they had like disparate information. Yeah. So to answer the gentleman's or question, I think Nivesh's question is first, in order for an LLM to be able to provide forecasts, it needs to have inbuilt rules that go into the knowledge base, which is the statistical analysis rules, regression analysis rules, as well as the knowledge base itself, because it needs to make a decision. Think about it this. An LLM needs to make a decision on priority of information, of what is more important in what instance on the base of the question. It becomes very complex. And it also needs to have access to decades of data. Remember how we said past doesn't repeat, but it rhymes. And this is where pattern recognition becomes very important because an LLM can recognize patterns much faster. So current LLM models can provide you with some information. The issue is that they don't have access to paywalled information. Now, question number two is if LLMs had access, think about it this way. If LLMs had access to paywalled information, CoreLogic would cease in a day. CoreLogic has a $2 billion valuation, yeah? It's an international company. So if LLMs could access, that's not the only thing. The LLMs would need to be trained on that data and on the rules in order to interpret and reason, okay? But, the team of engineers at OpenAI, I'm sure they can manage that, core logic would actually cease to exist, which means that the possession of data becomes a gold mine, and the organizations will really, really, really protect it moving forward. You know, to give you an example, some LLMs are actually blocked even from websites. Okay, so you have Grok, for example, which is you know, Elon Musk's LLM, is actually blocked from a lot of websites, while Perplexity is not. Perplexity for web searches is much better than, for example, ChatGPT. You know, so you have LLMs that are good at certain things, and it also depends on the access that they have. But at the moment, LLMs have reasoning capabilities on the information that's provided on the web, and we all know the information that's provided on the web. We just discussed the fear and greed implications of marketing and of newspapers. And if they're selling fear and greed, do you know how many times I've read that there's a doom and bust and gloom or whatever it is? So LLMs are essentially making reasoning arguments on the basis of what they can access, which is why, you know, they can pull information from open sources, such as maybe Reserve Bank information, if it's not paywalled, regarding interest rates. So you can already have that, you know. The problem becomes the projection and anticipation. In order to have that, you need to have, bottom line, first, knowledge base that the models are trained on, number one, and number two, you need to have access to as much past data as you can regarding sales that exist behind the paywall. Yeah. The day that LLMs have access to that data, we are all going to be out of jobs. Most of us, let's say most of us, because there will be a personal element. And as I said before, it depends on the user and how they ask the question, but the industry will change dramatically. Will that happen? Well, it will be very stupid for CoreLogic or for, I don't know, you know, whoever it is, to actually make that data available, because they lose competitive advantage. Now, what will happen is that these organizations will start developing their own LLM models to battle with this. And this is why I'm saying the future is actually interesting but frightening at the same time, you know, which is why we're trying to anticipate what's going to happen. And our models have access to all of the data plus the web. And this is where answers become robust. So the answer is yes, you can get the projection. When I say you get the projection, you will not see. The thing is, again, coming back to comparison and pattern recognition. In order for the term to pattern recognition to exist, there needs to be a pattern. In order for a pattern to exist, there needs to be more than one. Yeah. So again, it comes back to comparison, you know, which means that the output is probable. So what I'm saying is that you can have a projection, but it will not say it will grow 17.56% in the next 7 years or in the next 2 years. That certainty and definitive nature of an output will never exist. It will never exist in this four-dimensional universe. It doesn't exist. But it will give you probabilities. It would say there's a higher probability that this will grow more than this other thing, and these are the reasons as to why. Okay? So that's how it's going to work. But current ChatGPT, Perplexity, Grok, you know, whatever, you know, all of these models, which I use daily, but not to make property investing decisions. I use it for other purposes. Do not have access to the information which give them the robustness of accuracy.
Got it. Yeah, just on the same things, like, you know, when people just say that ChatGPT is gonna be doing things, when they're choosing brokers, when they're choosing buyers agents, they ask them this question: are you an investment savvy broker? Do you have any portfolio? They ask the buyers agents when they choose them, what's your portfolio like? So they know that this person can be trusted, their knowledge can be trusted. Are you going to be asking the same questions to the ChatGPTs, to the AIs?
You can't, because I have properties in a trust. It's not under my name.
Yes.
That's the first thing. So there is a privacy element to it, and also there is an inaccessibility element. Okay. Now, will the ChatGPT be able to pull your Google ratings? Yes, of course. But your Google ratings are public anyway. You know what I mean? But see, this is the problem. This is what sort of makes me furious, and I'll tell you why. I'll tell you what makes me furious. Who is a better property investor? A trust fund baby that is inherent tens of millions of dollars and has 15 properties, or a single mother on a 50K income that has one?
A letter.
Correct.
Yeah.
So the question, see, this is why there needs to be a level of critical assessment embedded in what you're asking and what you're trying to understand. Yes, ChatGPT might be able to give you certain information, but if you're completely outsourcing thinking, I'll give you an example. Since Google got introduced, I can guarantee you that the population's capability to memorize things has eroded by 80%.
Yeah.
Why? Because we're typing things into Google, comes out. We used to read encyclopedias, and to show off in public that we know things, we had to actually remember stuff. Yeah? But you don't do that anymore because you just Google it. So what I'm trying to say is that if you're going to outsource thinking completely to an LLM agent and not be able to first ask follow-up questions, but understand what is actually meaningful, because meaning is a human quality. And I just giving you an example of two investors. One has one property, one has 10. And if I just simply ask how many properties you have in your portfolio and just making a decision on the basis of a number, I would make the wrong call because I wouldn't have that emotional context and not just emotional, but the meaning context behind it, which is imperative or needed for me to make the appropriate decision. And we're coming back to the follow-up questions of the LLM and knowing what to ask as a follow-up question. Test an LLM in a domain of knowledge that you know. How about that? And you'll see its inadequacies that you actually know. And that there is, we have to understand that it's a machine. Now, LLMs are great, guys. We are building ones. They're great because they allow you to access information at speed and in a tailored way, how you want it. Specific question to you. And LLMs are extremely powerful if your knowledge is also great. As I said, a nuclear physicist can use LLMs and LLMs, but I can give you an example. Sorry, guys, I'm going on a tangent. McKinsey & Co. Have you heard of McKinsey & Co?
Consulting firm.
Correct. Yeah. Now, they're in big trouble. Why are they in big trouble? Because Perplexity has a finance attachment that does an extremely good job. So business analytics and finance. And you can go to Perplexity and you can try and use it. McKinsey & Co. Because why? Because they have access to Bloomberg and all of the share, all of the trades and everything, I think Perplexity has access to Indian, because it's an Indian company, by the way. And I think they've got, funnily enough, another head office in Belgrade in Serbia, which it's like an IT hub there, So they have access to Indian share market, and I think they struck a deal with Bloomberg and stuff. And people are realizing that analysis of trades are done much better with the LLM because it's been trained. So McKinsey & Co. are now trying to figure out a way on how to compete because it has access to information. Yeah, that's the problem, and you don't need to pay, a share trader or in a hedge fund to trade the Indian share market. You go to Perplexity and you ask a question. Now, the problem is a hedge fund manager using Perplexity will get a much better output than me and you because he will know how to ask the right questions and how to investigate a company. What are the right questions? What are the indicators of companies' growth? Amazon, I'll give you an example. There were stages where Amazon share price was tanking while its internal indicators, such as customer acquisition, cost per customer acquisition, all of these other things were improving. And actually, Jeff Bezos talks about that and says, our share price was tanking while our business was doing great. If people invested then, they would have made billions, if millions, because it just rebounded then internally. Because the internal questions that you need to ask, So, short answer is you need to have a level of discernment to understand what you're actually interpreting and reading. And ChatGPT will not be able to tell you, by the way, some listings are blocked. You can't have access to listings. Some listings are taken offline. Every fifth listing now is sold offline. And that's the direction that it's moving. You know what I mean? What happens when you can't have access to the information? What happens when a buyer's agent has a great relationship with a sales agent and they get the deal first and it's actually not published anywhere, so you can't access it through ChatGPT?
Yeah.
And Ashish, you would have experience with this, yeah?
We've got agents who always bring properties first to us.
And they're not present anywhere. They get recorded later as a sold.
Spot on.
They get recorded as a sold, but what good is that to you when you don't have access to it before, when you actually need it to buy,
100%. Yeah.
I don't know if I answered the question. Sorry.
I think you did, and more. You did answer the question and way more, and gave us more than we asked for.
I think
thanks a lot for that.
Yeah, there's so much to discuss, Matt, and this is where I feel those 2 hours sometimes we feel are not enough.
Yeah.
Yeah, no,
Yeah, but
absolutely.
let's wrap it up on this note, and we can continue this conversation again about AI off-market, pre-market things,
Yeah,
and we
yeah,
can do it
absolutely.
again
Yeah.
in a few months.
No worries. No worries.
Awesome.
Thanks again, Matt, for joining and
Thank you,
giving this
Matt.
all these
Yes.
insights.
All right,
And
gents, thank you for inviting me. Whenever you like to chat, as you can see, I'm a talker. Feel free, feel free to invite me, and I'll gladly join.
we'd love to do that.
And I wish you all the best to you and your community.
Thank
Thank
you,
you
Matt.
so much.
I'll
And I
see you
think
soon.
it's equal reciprocation to our audience as well. There's some people who've literally stayed pretty much until the end. So I would like to convey a big thank you to everyone.
Sorry, Nakul wants to know, Matt, how do they join the community with you?
I'll send you
We will.
guys our mastermind community link.
Yeah,
You can distribute it to your community. It's a free.
We will do that.
There's a freemium option where, like, there are some aspects that are free. You'll see discussions. There's a lot of knowledge being shared, because the community is also tied to our subscription. So there are additional levels for paid members where I do the coaching thing. But there's a lot of stuff there that you can look at, and I even do master classes that you have access to. So essentially, I'll share the link with you guys if you don't mind. Right after this, I'll send you the link.
done,
Absolutely.
Matt.
That
And
would be
we're going
lovely.
to
We'll
share it
share
with
with
everyone.
everyone.
And yeah, just also if you'd like to pass on any discounts for the community, we'd like to just give it back
I
to
can
the
Give
do
it back
community.
to
no
them. Yeah.
problem, no problem. I can do that as well. I can do that as well. It would be what, the investor plan or the professional? I think it's mainly investors, yeah?
I'd say so, yeah.
Investors. Okay. I'll do that now. I'll do that after this. So
Thank you,
Sounds
Matt.
I'll send
great.
you guys the code. Please don't distribute it just for your community, okay?
Yep,
So
We will
just
just do it for the people who just registered for that, not even outside that.
whatever you guys choose is just for your community. I want to bring value.
Really
done.
appreciate that.
Works well. Thank you
Really
so
appreciate
much.
that, man.
And I'll send you the link to Mastermind.
Thanks a lot.
Done. Works well.
Uh,
Thank you, Matt.
all right, legends. Take
Take
care.
care.
Yeah.
Bye.
Peace
Thank you,
out. Bye bye.
everyone.
Bye bye.
Bye-bye.